Hello and welcome to the Small Business Briefing. I'm Brian Calley, CEO of the Small Business Association of Michigan.
Hi, everyone. Good afternoon. I'm Sarah Miller, Vice President of Communications at SBAM. We appreciate you tuning in today. I want to start off the show by welcoming one of our new premium members. They are Kind Crumbs LLC, and they are a celiac-owned wholesale gluten-free bakery in Grand Rapids, Michigan. So welcome to Kind Crumbs and all of our new members last week. All right, so let's dive right into the show today, starting with unemployment benefits. So, unemployment benefit amounts are increasing and the duration is increasing as well. So, Brian, tell us what employers can expect.
Well, these changes go into effect basically starting now. There was a bill that passed late last year that did not get what's called immediate effect, which means that the bill has to wait until 90 days after the end of the previous session last year. So here we are, 90 days later, and that bill goes into effect. And here's what happens. It's the weekly amount. There's two big changes that are happening. The weekly amount of unemployment benefits goes up. So it was a max of 362, $362 net is per week, and it will change to a maximum of $446. So it's an $84 increase per week in the benefits. So that's what it is in 2025. In 2026, it will go up to $530, another $84 a week increase. And then in 2027, it'll go to $614, again, $84 increase. So they have baked into this law three $84 increases that will take the benefit from a maximum of $362 up to $614. And then at that point, it will increase by inflation every year, the consumer price index. So that's the first thing that changes is the weekly benefit, and that will essentially start for those who are getting paid at the end of this week through the unemployment system. The other big change is the number of weeks that you can be on unemployment in any given year. And that has been 20 weeks for more than a decade now. And that is being extended out. There was a period of time, um, we don't need to, I guess, rehash the whole history, but it's been 20 weeks for a long time now. And it'll go to 26 weeks. So 50% of a given year, a person can be on unemployment. Those are the big changes that are happening. One other just kind of caveat that unemployment does have a dependent allowance as well. It's like a tack on in addition to the regular weekly benefit. And that will go, it's $6 um, per dependent. It'll go to 1266, then 1933, and then $26 per over the next 3 years as well. So those are the changes so far. The department is actually going to make them retroactive to the beginning of the year. So if somebody has been on unemployment since this bill passed last year but didn't take effect until now, they're actually going to go backward and make up the difference, which means bigger withdrawals out of the unemployment insurance trust fund that is employer funded. So it's a pretty big change. It's been a couple decades since we've seen changes in the way that the unemployment system works, at least to this extent.
I did share a link to an article that we posted on our website here on Zoom and on Facebook so that people can have those reference points, for them. But Brian, how long before you expect that this will really impact employers?
Well, there's a couple of different potential impacts on employers. The first is whether or not it will result in let people in higher, or I should say lower labor force participation rates. If that is to happen, then that's the sort of thing you would expect to kind of gradually happen over time. Michigan's labor force participation rate is already pretty low compared to much of the rest of the nation. But that's one area that I would expect in this first iteration, probably less of an impact on labor force participation as compared to next year and the year after. What we have experienced is that $600 threshold seemed to be pretty important. We heard a lot from employers about a difficulty in finding people wanting to get called back to work when that $600 a week threshold was passed. The more immediate impact, though, is going to be the rates, and this happens on an annual cycle. So 2 quarters into the year, 6 months into the year, is when the unemployment department at the state does an analysis of the trust fund, how many assets are in it, and what the outflow is. Of course, the outflow is going to go up, so they'll look at what the experience will have been, and then what they project for the next year. And they'll make some assumptions and they'll base their rates on that. So later on in the year after that 6 month review, which happens in the third quarter, then fourth quarter, and certainly the next year, you should start expecting to see your unemployment insurance rates go up. It's a given that they will go up. It's a guarantee. They have to go up with these benefits, these type of changes to the benefits, because everybody on unemployment will see an increase. But or actually I shouldn't say that, but anybody maxed out will see an increase, and it'll be a pretty substantial number. What we don't know is how much of a rate change it will make to the average employer, because that depends on how many people are unemployed. And unfortunately, it's one of the other things that we're going to talk about. We've got more people unemployed here in Michigan than we've had in a while.
So when you're talking about the unemployment rate, the numbers seem to be trending downward. So where does Michigan stand relative to the country as a whole?
Yeah, we have been tracking this for a while, and you might recall as we had just followed it from month to month, that there was not, if I go back all the way to last February, so for essentially 14 unemployment reports back from today, there was never a single month where you'd point to and say, whoa, that was a really big change. It was just this little bit, it was just creeping up. And then remember when in our Data Monday report, it was like, we had 6 months in a row of unemployment increases, and each one was just a little bit, but it was starting to add up. And then that trend has continued. So from February of last year, when unemployment was 4% flat, which was either at or maybe even a tenth below the national average at the time, it has just crept up. And this right now, this last report from March was 5.4%. 5.4% is it makes it such that the increase is while in the given month it was only 1% higher, that the increase is among the highest in the nation. So Michigan was, let's see, when compared to the 50 states, it was the biggest jump. So the largest increase in unemployment of all the 50 states was here in Michigan from February till now, when Michigan hit its low point to where it's at today. Number 2 was Mississippi. And then just for context, though, the lowest unemployment in the country is South Dakota, and they had 1.9% unemployment. So pretty big changes. Now, that doesn't mean that Michigan has the highest unemployment in the country. It was the biggest increase from that low point. The country had a low point of unemployment. Low in this case is good, right? So lower unemployment, good. So Michigan was tied with California for the second highest unemployment in the country. Nevada actually had a higher rate at 5.8%. So not particularly good. It doesn't, again, I know it's kind of like a broken record. It's not like the bottom has fallen out. It hasn't. It's just crept in the wrong direction for well over a year now. And it is gonna, I think you're gonna start to see it in different ways. Higher unemployment, that fewer people unemployed, it just starts to add up. And we already are starting to see it in a few ways. And Michigan has to be really careful. Um, just a little bit of commentary on it too. Over the last few years, there's been a lot of focus on factory type jobs, and it's just a really risky place to be. Michigan has not done well since the turn of the century, relying too much on factory and on those types of production jobs because they go up and down quickly with the economy. N Not even getting into like all the global changes that are happening right now, trade policy, which we'll talk about in a minute. But this is there's a certain vulnerability with so much reliance, and it just seems like over the last several years the strategy has been about how do we rebuild or recreate dependence on um, manufacturing rather than how do we continue the path toward diversification that we were on. So I'm afraid that it just there's no one thing you could point to and say, wow, this really big sign of trouble, but it just feels like it's eroding. The strength of the economy is just eroding away.
Right, so you brought up trade policy. Why don't you give us the latest on the tariffs?
The automotive tariffs were the first step. So the 25% increase, we talked about that last week. Um, and that's in addition to the regular tariffs that have already been in place. A lot of people don't realize that trucks already had a 25% tariff on them. And then automobiles had a 2.5% tariff on them. So automobiles will go to 27.5, so 25% higher. Trucks actually go to 50%. So it's in addition to what was already in place. So it does kind of beg the question, like, well, how many vehicles will be subjected to it? And it is hard to get exact numbers on this. There was a financial analysis by S&P Global that estimated that from a final assembly standpoint, so cars that have their final assembly, not talking about parts into cars, we'll talk about that in just a minute. It's a separate, there'll be a separate trade policy on that we don't know the details of yet. But when it comes to final assembly, 46% of, and if you were to apply this policy to sales in 2024, then you'd have 46% or a little less than half of vehicles would be impacted by this. So that's on a final assembly basis. And then, but we expect this week will be kind of the part two, which is about the contents, about the parts that go into vehicles. And so I would expect at least major components. So if you have a final assembly of a vehicle that happens in the US, but the engine is made someplace else and sent to the US, then there's going to be then I expect that there will be a similar tariff on that type of activity. There is there's obviously a big impact that this will have domestically. Under NAFTA or the USMCA, there is a practice. It'd be very interesting to see how companies in other places deal with these changes because though like Chinese companies, for example, have invested pretty heavily in Mexico to have entree into the North American market under the free trade agreement. There are some that argue, well, that kind of violates the spirit of free trade agreement between Mexico, US, and Canada. So if Mexico becomes kind of a backdoor entry into free trade for China and they still have their market closed off, doesn't somebody have to do something about that? There's there's so many missing pieces or moving pieces to this policy that I think is going to take a little while for it to settle. But I would expect some disruptions. The the one thing that has come up though is the that Stellantis, really the first kind of major move. You might recall that there was severe scaling back in the Belvidere assembly plant, which is in Illinois, and they have announced that they're going to reopen it. It'll take until early 2027, so almost 2 years from now, before it is open to this. But they'll be building the new Ram midsize pickup there. And that factory, at least before, it employed like 5,000 people. So I think you're going to see some scrambling from domestics saying, which of the plants that we recently closed that it wouldn't take too much to get fired back up that could make something. You'll see some of that. This really isn't, to me, that's not the open question. Will there be more jobs created and more kind of domestic production created? Of course there will, because the market here is huge and people are going to want to get at the market. Really, the only open question is whether or not, how big a price impact it will have on the overall market. How much more expensive will things be, and how will that match up to increases in income relative to the jobs? That's really the open question. The thing, well, are people going to make more stuff here? Yeah, they're going to make more stuff here because they don't have any choice. So it really is a cost of final production question at the end of the day. Lots of moving pieces. And even though it's on its face, it doesn't seem like this is, hardcore small business issue, it is one where the Midwest, and especially Michigan, of course, is so reliant on this industry that we'll be following it pretty closely. And I think we'll probably be better positioned than other places in the country to benefit from reshoring, simply because the industrial base here is just stronger. There'll naturally be more opportunities to absorb the demands. And then really the big question, even for us though, will still be, how does the income and the jobs stack up to increases in costs when you get essentially when there's a big force kind of mitigating the cheap labor impact of Southeast Asia and Mexico in particular.
All right, so kind of in a similar vein, we know that politics often makes for strange bedfellows. So tell us what's happening between President Trump and the UAW president, Shawn Fain.
When Shawn Fain first took the office, there were brutal labor contract negotiations between Stellantis, General Motors, Ford, each of them individually with the UAW. At the type of language, type of actions we hadn't seen in a long time. And it is kind of ironic because you might remember that I had mentioned at the time that while it's different sides of the coin, that he kind of reminded me of Trump in the way that he negotiates, Shawn Fain, I mean. And so at one point, these two were polar opposites, but they have come together on this on trade policies. So more protectionist trade policies that are meant to essentially force those who want access to the U.S. market to build things here. Well, the UAW has definitely gotten on board with that. It's so different, the change in posture and conversation on it. First of all, NAFTA and the USMCA, the free trade agreement in North America, is something the UAW has long had bad feelings about. But Shawn Fain went, so I've got a quote here, said Vice President Gore was talking about how all the living presidents and the top economists agreed NAFTA would be great for America, lift up the standard in Mexico. Their estimate was 400,000 jobs to be created in America in the first year. 30 some years later, we've lost 90,000 factories in America. Now, I had never heard that phrase before. I want to kind of look into it. It seems like a lot. We've lost millions of jobs. The standard of living in Mexico was cut in half, and wages in America have been suppressed. It did not work. The so this decision to kind of like go all in and actually create a contrast with Al Gore, I thought was notable. And he was even on the Sunday talk shows, political talk shows yesterday, at least one big one, to talk about this. And before, it seemed like he was dipping his toe in the water on being in favor of these policies, and now UAW really looks to have gone all in. Um, so the UAW, in a Wednesday statement, praised Trump's announcement and argued tariffs would spur the creation of thousands of U.S. jobs in coming months. And then they actually went through, and this is what caught my attention. They cited a number of underutilized plants, including Ford's Flat Rock Assembly here in Michigan, and Stellantis Warren Truck as places where the companies can shift production to. And then, and when asked about the threat of increasing prices, UAW President Fain said that he considered those merely scare tactics. So this will be it takes a while for this to really settle, but I could see several kind of iterations. The market will find a new equilibrium. It will, because it has to. How much prices will go up will depend on a couple of factors. You are going to see some reshoring, but it'll be reshoring to a place where they might avoid the tariffs, but they'll have higher production costs because people in the US have higher standards of living and make higher wages, which I think most would agree is good. But then at the same time, there's a productivity revolution happening with automation and artificial intelligence. So maybe the cost of human participation in production is going to over the next 10 years is going to decrease anyway. In which case maybe it won't matter as much, but in the short term it will. In fact, I could see how it could drive up remember in the pandemic when new cars were more scarce and that used car prices went way up. That's an example of the sort of thing where you could see that type of a scenario playing out. Like that's in the short term. People might keep existing cars longer, or they might, which would mean new car sales go down, or they might keep, or they might buy used vehicles as well. So those are a couple of different iterations, but it's hard to say because the market, sometimes it's predictable and sometimes it's just not. But one thing I'm pretty sure about is that we're not going to see a bunch of delays anymore, or at least not on the big parts of the policy. I think the delays are over, and I think they're gonna land wherever they're gonna land, and they probably will tweak it here and there, but I think that by this time next week we'll know where the big parts have landed, and the big open question is going to be, how does the reciprocal tariff policy work, and the non-tariff barriers to entry to other markets? How do those figure into U.S. tariff policy or non-trade barriers on the U.S. side of the equation? Big changes coming our way. And while I don't know exactly how all those things will end, one thing I do know is that we will follow it closely, and you'll be able to get the scoop here.
All right, well, thanks for that update, Brian. Let's switch gears and talk about retail. The Michigan Retailers Index was released last month. So tell us how retailers are doing.
Well, I wasn't surprised to see the retailers number, their index that they publish monthly, down because consumer sentiment is down. The U of M, in fact, I've got it in Data Monday's slides. The consumer sentiment index is that the U of M, University of Michigan economists have been producing for a long time. So around 53% of retailers reported a decrease in sales in February from January, while 38% said reported an increase and 9% saw no change. So it puts the February retail index at 41.5 out of 100, and in January it was 62.2. So it's pretty dramatic drop month over month. And now it's not unusual for it to dip in February. It just dipped deeper than it normally does.
All right, well, with that, let's take a look at the Data Monday report.
All right, we got just a few things here being at the end of the month to share. Go to the first is a Gallup. It's a poll from Gallup on work from home, exclusively remote or on-site work. And I would say if you're to look at from 2022 on, it looks pretty darn stable. 55% of the respondents have a hybrid work situation, 26% that are remote, and then 19% exclusively on site. Just 1 in 5. It's really something else. Just how different that is from pre-pandemic days. Here's what I talked about, the consumer sentiment index. As you see with consumers' expectations and current economic conditions, all of those taking a dive so far in 2025. And so this is one, it makes sense to pay attention to the consumer sentiment index. You can see that it actually has never even really recovered from the pandemic. So people generally feel more pessimistic these days. But this really tracks with consumer behavior. It's one that you just makes sense to pay some close attention to. How consumers are feeling is really, really important. And then consumption expenditure, these are inflation numbers that we didn't share before when we shared the CPI numbers before. These weren't yet out. This is the one that the Federal Reserve looks at the most closely. And so you might have noticed, though, when these numbers came out, stock market kind of took a dive, and year over year, which is what this slide, it compares right now to a year ago, and it looks not too bad, right? But if you're to look at it month by month, you can see why the disappointment, because whether you're looking at core or you're looking at the headline number, just that generally the trend is not is not good, not out of control or anything, just not where you would want it to, where you'd want it to be, at least if you were looking for interest rate decreases. Personal income back on the positive side, and then that's on the top. And I apologize, I think the picture's in the way, but the personal income over the inflation on the bottom, essentially, and income rate rising higher than inflation, which of course means buying power is going up. U.S. gross domestic income, so not gross domestic product, but gross domestic income tracks with that previous graph. And then here's the final one, and it's this graph that is put out regularly by the Labor Department. That you see highlighted here is the number of unemployed. Remember when I talked about going back to last February, and so that's what's highlighted here. There are 70,000 more unemployed people in Michigan today as compared to February of 2024. So that's sometimes you can see, like when we talk about unemployment going up, you can see that sometimes it goes up because the labor force grew and those people hadn't found their way to work yet. But in this case, that's really not what we're talking about. What has driven up the unemployment rate is the fact that there are just more people that are unemployed. And so again, not a bottom falling out type situation, but cumulatively starting to look bad.
All right, let's end on a positive note and talk about Michigan Celebrates Small Business, which is coming up April 21st and 22nd. Brian, why do our viewers want to attend?
Please do consider checking this out if you never have. It's a 2-day small business summit, and it's action packed. It's got all kinds of things that are involved in it. So there's a trade show and educational opportunities, breakout sessions, lots of good professional development and networking opportunities, but then a capital experience, a look behind the curtain and how the process works and how you can engage and not just be a bystander about how the rules are made and how they impact you, but really figure out how to get in there and make a difference on those rules. And then the awards gala tops it all off. And this is for the 50 companies to watch and several other awards categories. Um, we talked about the risks of having all our eggs in the manufacturing basket, and small business is the answer to that because yeah, small business is involved in manufacturing, but everything else too. And that's not you're not going to find any other place where that is showcased more plainly and explicitly than when you look at the 50 companies to watch, these exciting second stage growth companies that are small but doing really, really big things and have a very bright future. It's really about celebrating those companies, and you can tell a lot from a society by what it celebrates. And so for us here at SBM, we celebrate small business.
All right, michigancelebrates.org for tickets. Thanks everyone for joining us today. We'll see you next week.
Thanks, everybody. See you next week.